Hey everyone, and welcome back to the channel. In today's video, we're going to dive into velocity banking, but more specifically look at the top 4 steps that individuals need or should consider before starting the strategy. Our first 2 steps will look at elements that are not fully required for velocity banking, but without them, the risk is significantly amplified. And our final 2 steps in today's videos will look at elements that are required to use the strategy. Our one ask is if you do get value out of this video, please consider subscribing to the channel for more content related to velocity banking and everyday finance so we continue to grow the channel. So without wasting any more time, let's jump right in. Starting out, our first step is to have a strong plan and understanding of the risk involved when it comes to velocity banking. This involves knowing your personal financial numbers inside and out, such as your income, expenses, debt, and cash flow. The reality is when it comes to velocity banking, the numbers need to make sense for the strategy to have any chance of working. Meaning it's extremely important to first do your research and take the appropriate steps to fully understand how the strategy works. Once you understand the strategy, you can then begin to investigate how it potentially work with your own unique financial situation. But even if you run the numbers and velocity banking seems to mathematically make sense, your work is not done there. The next thing that an individual needs to do is weigh the benefits of the strategy against the risk. Just because a strategy looks good on paper does not mean it's suitable for certain individuals, as it does still require substantial financial discipline. If you're someone who in the past has struggled to control your spending or execute financial plans, it's important to carefully consider whether or not you'd be ready for something like velocity banking, as failing to stick to the strategy can be extremely costly and risky. This leads us into our second step, which can provide a buffer if we do experience changes to things such as our income or expenses after implementing the velocity banking strategy, and that is having an emergency fund. Although it is not required to start velocity banking, not having an emergency fund can be a costly mistake. With velocity banking, we are leveraging some sort of line of credit to accelerate our debt repayment, but of course we still have an obligation to repay that line of credit plus any interest. Maybe when we first began to plan for velocity banking, the strategy seemed like it would work great, but then all of a sudden we lose our job and our monthly income drastically changes. Although these types of scenarios can seem unlikely, it's extremely risky to not be prepared for them. That is why it's an excellent idea to have an emergency fund before starting velocity banking so that it can serve as a safety net in the case of sudden changes to your financial situation. Moving on to our next step, which is a requirement rather than an option to start velocity banking, and that is to have access to a line of credit. As when it comes to velocity banking, we are using additional cash flow from our line of credit to make a lump sum payment onto our debt, such as a mortgage. However, it is not only important to have access to a line of credit, but rather have one that has enough room on it to truly take advantage of the velocity banking strategy. For example, with velocity banking, we'll be paying all of our expenses onto our line of credit, so it's key to ensure that we'll have enough room on that line of credit to cover all these expenses, as well as also having room to make additional payments onto our amortized debt, such as our mortgage. But the reality is that getting approved for either a personal line of credit or a home equity line of credit, especially one with a larger limit, is not always an easy thing to do. If you find yourself in a position where you can't gain access to a line of credit but still want to implement velocity banking, it does not mean you'll never be able to implement the strategy, but rather there are additional steps that you'll need to take first. And even if you can gain access to a line of credit, it's important to first consider whether or not you're getting a favorable rate. If you are someone who can't get a line of credit or you cannot get a favorable rate, a great first step can be to focus on first improving your credit score and relationship with lenders before applying for a new line of credit. This will give you some time to continue to educate yourself on the velocity banking strategy while also preparing yourself for other key steps, such as building an emergency fund or improving your cash flow situation. This leads us to our final key step, which is having the appropriate amount of cash flow. The reality is, without a sizable line of credit and cash flow, the velocity banking strategy is not going to work. And that is because even though we are gaining access to additional leverage from our line of credit to make a lump sum payment onto our mortgage, we still need the additional cash flow that will allow us to satisfy both the mortgage payment and the payment on our line of credit. So it's important to first carefully evaluate whether or not you have the additional monthly cash flow to be able to satisfy your line of credit on top of your existing mortgage. This requirement can typically lead individuals to be confused about the difference between velocity banking and making an extra payment on your mortgage, since in both scenarios you need additional cash flow. To better understand this, we recommend watching our in-depth video going over these key differences between making an extra payment and velocity banking. We'll link the video down below in the description. If you do find yourself in a position where you do not have the proper cash flow to implement Velocity Banking, you then have two options, which are 1, lower your monthly expenses, or 2, increase your monthly income. Although these two things can be challenging, with the right focus and determination, they are achievable. That is all for today, but if you did get some value out of this video, be sure to leave a thumbs up and let us know if you have any questions down below in the comments. As well, be sure to subscribe to the channel on your way out for more weekly content related to Velocity Banking and everyday finance.